Hey, good morning, everybody. Good afternoon or good evening, depends where you are. I'm Barry Parker for Capital Link's Trending News podcast series. And today, really happy to have on here the crew from Navigator Holdings. They're on New York Stock Exchange with the symbol NVGS. So we have today Oeyvind Lindeman, who's the Chief Commercial Officer, and Randy Giveans, who's the head of investor relations and business development for North America. So Navigator Gas is an owner and operator of the world's largest fleet of handy-size liquefied gas carriers and global leader in the transport of petrochemical gases. And those include ethylene, ethane, LPG, and ammonia. And the company owns a 50% share through a joint venture in an export marine terminal in Texas on the Houston Ship Channel. That's an ethylene export facility on the Houston Ship Channel. So Navigator Holdings recently announced their Q1 2022 results. And that's the occasion for having this call. So let's start with what we want to do is talk about the gas carrier market, like the current state, and then the outlook. And I know that the U.S. has record exports, at this point. So I wonder if one of you could start us off on the current state of the market.
Yeah, thank you for the question, Barry. When you ask the question about gas carrier market, we have to be cognizant that we operate in 3 different sub-segments. So we trade ammonia, we trade LPG, and we trade petrochemicals. During first quarter, all of the above, all these 3 markets that we operate in have been quite robust and quite positive. And why? It's really to do with geopolitical issues, because Europeans have had to look for, they had to diversify their supply sources. So instead of importing LPG, which is used for energy or feedstock in petrochemical production, they had to look elsewhere. And who else is there to supply and replace? Well, it's North America. And luckily, there's an ocean in between. And of course, if the distances are greatly increased between the Baltic Sea that we operate in, partly, versus to Europe, versus on the East Coast or US Gulf Coast to Europe. So clearly the distances in LPG have increased, which is good for freight or for the shipping market. And the same has happened in ammonia. So ammonia is 18 million tons transported per year globally. 2 million of that comes through the Black Sea. Well, clearly that had to stop. But the world needs ammonia for agricultural growth. So the demand hasn't gone away. So the consumers of ammonia, they will also forced to look for alternative supply sources, which again are further afield, increasing the distances needed to transport a ton of ammonia. So that is great. On the petrochemical side, US production of natural gas liquids have gone up and up and up, despite everything that's happening. So production, rig count, etc., is on the increase. And that is ethane, and that is propane. And those 2 sources are exported themselves, which we do. But also US midstream companies convert those molecules to ethylene and propylene, which we also export. So Q1 accumulated with quite a positive back setting for freight. The European situation, for sure, had a positive impact on the freight side. But let's not forget that the biggest locomotive of the growth is still North America, and that was going before everything happened in Europe. It just supercharged the situation.
Okay, let's segue. You've talked about the present. Let's talk about the outlook. They kind of come together, and I don't know if it's possible to separate the geopolitics from the economics, but just give us your thoughts on what you see going forward, picking up on what you just said about the present.
Yeah. So if you talk about shipping, the textbook example is very basic supply-demand balances. In the handysize segment, which is core to Navigator, there's really only less than 5% supply increase over the next 3 years, which is very low in any shipping segment. So that box is ticked. And with increasing production of, particularly from US, on ethane, from propane, and the production of ethylene and propylene, if production and export need goes up, which it is, because US demand is flat line, so any increase in production and so forth is needing to be exported. So you have more exports, and you have longer distances sailed or needing to be transported, and sort of flatline supply growth in the segment. Well, those basic elements should indicate a more robust freight market going forward.
So that's going to keep going, and next the geopolitics. It's hard to predict, but just any kind of disruption just tends to be good for shipping. That's just been my observation.
That is correct. I don't think because I'm in Europe. I'm from Norway, and we are bordering Russia up in Norway. But so we have some understanding. I don't think this is going to go away anytime soon. I'm talking about the supply sources and the sanctions and stuff. So I think this is here to stay for a long term. US will go from strength to strength because it is the continent that could provide the backstop for Europe, but also for Asia. And we see that in ethane and ethylene shipping, which is our specialty. Long distances, loading from our own terminal in US Gulf to Asia. A round voyage takes 2 months on a handy-sized ship carrying 150,000 barrels. So that is good for that side of our petrochemical business. So I hope that answers some of the questions.
Yeah, well, it's going to be a good story going forward. That's for sure. Let's talk about you. You just announced the Q1 results. Just wonder if you could highlight the results and any particular achievements in the Q1 results.
Yeah, so we the first quarter of 2022 was the best for a long time. So we had the net income of 27 million, which is 35 cents per share, which is fantastic compared to quite low for a year ago. And that's because of the reasons we've just mentioned. And the terminal itself, so that's on the shipping side, the terminal itself performed wonderfully. So it lived up to its expectations of exporting almost 100,000 tons every month in the first quarter. And that has provided robust earnings from the terminal side. So what people need to understand is the combination between the asset, the infrastructure on shore, which is fully contracted. It gives stability in terms of earnings long term. Combine that with the shipping side, which is slightly more cyclical. So those two in combination, they were kicking on all sort of horsepower, both of them, producing those results that you can see on our website, in our earnings report and so forth. And that is the magic that we have been talking about for the last couple of years, but now it's happened. And it's nice to see that we can actually produce and show those kind of numbers.
That's good. We're gonna talk about the commercial side of your business, but gonna ask you a dumb question. Ethylene, I wonder if you can just 30 seconds or a minute, just talk about, I know it's an important commodity, but what it's used for around the world?
So ethylene is the largest component for the production of all things plastic related. So that is your computer casing, your dashboard on your cars. It goes in textiles. It goes in to production of face masks, bottles, etc., etc. So it's consumer goods that generally enhances people's lives in terms of food packaging, insulation, makes it last longer. So all those things, ethylene is used for. Now, the trick that people need to understand is, where does ethylene come from? So in the past, ethylene is produced by oil. And many places still in the world, they use oil as a feedstock to produce ethylene. Now, of course, oil is expensive and is uneconomical compared to North American production of ethylene using ethane, which is a gas that you produce in the US, highly competitive. You take that and you produce ethylene, and you Americans, the American petrochemical industry has a huge cost advantage. And that is why we have an ethylene export terminal to ship those out. So the demand for ethylene is there. It grows with GDP. It's not going to go away. And that is, and in the US, you have cheap feedstock, cheap production, makes it competitive. We have the vertical on the terminal and the ethylene shipping, which is very complex. And there is the magic of ethylene.
Well, sounds like you're certainly in the right place. You have the terminal for the exports, and you can take it on your vessels. Wonder if you could talk a little bit. I have the impression that, and I may be wrong, the ethylene and ethane, maybe those are spot cargoes, and then the LPG is more of a time charter cargo. I'm not really sure about that, but I wonder if you can talk about your charter mix between the term charters and the spot, and just how you manage that.
Yeah, we have traditionally had about 50% the time charter coverage and spot market exposure. And I think that that still holds today. I think the three different segments we're involved with, ammonia, LPG, and petrochemicals, they are different. In ammonia, we have 7 vessels on longer term charters. On petrochemicals, on ethane is a feedstock, so it lends itself to longer term charters. The ships are then performing a virtual pipeline, so the users of ammonia and the feedstock of ethane are not interested in spot. They want reliability, they want efficient, safe transportation, as in a pipeline. And that's what we do. In the LPG side, it's a bit more spot, some shorter term time charters. So it's a mix. But overall, it's about half term coverage for our 53 vessels.
Okay, and the utilization of the fleet, that's been growing, right?
Utilization moves around a little bit. When it's above 90%, we typically indicate that it's a typical indicator for a very good, better freight market. Q1 was hovering around 90%. So that is a healthy utilization number in our opinion and assessment.
Sure. I'm going to ask you about expansion. Actually, we were talking about the terminal, so maybe talk about that first. If there's any plans to expand. I think you're over the nameplate. The exports are more than the official capacity, so maybe that hints that there might be more coming. And then I know your fleet has grown with the vessels. Just talk about your plans for that.
Yeah, thanks, Barry. I'll hop in on the ethylene export side, and then Oeyvind can take over on the ships. But on the ethylene export terminal, you're right. It's been operating well above nameplate capacity. December, January, March, April, May, all around 100,000 tons per month. Nameplate capacity is around 83,000 tons per month, 1 million tons per year. So certainly operating above expectations and above nameplate capacity, right? So it's really coming to its own here. In terms of expansion, that is certainly something we were planning on, right? 3 or 4 years ago. That's why we built the storage tank to satisfy an expanded refrigeration facility, as well as the berth and docking to go along with that down here in Morgan's Point, just outside of Houston. So Enterprise has already been pretty vocal about the expansion. I was at their investor day about 6 weeks ago now, and
that's your partner in the terminal,
that is
right?
50, correct. Enterprise Products Partners, the midstream company, largest in the world. They've already announced that they're going to be expanding that terminal, the ethylene export facility at Morgan's Point, our 50-50 joint venture there. So we are certainly in talks with them around the timing of that, the scale of that, the cost of that. What they've been highlighting and kind of alluding to is about a doubling, maybe a little more, of the current facility, which is 1 million tons, as I said, per year, bringing on around half of that by the end of 23, and the remaining half late 24, early 25. So in 2025, the plan is to have over 2 million tons of export capacity there, so more than double of what we currently have. So that is certainly something we are very active in, looking at those options. Nothing to announce today, but clearly that is front and center in our priorities in the near term.
Well, we'll be standing by for more announcements. Oeyvind, what about the fleet of the vessels?
Yeah, our fleet today stands at 53 vessels. Market share is important to us in the handysize segment. With aging assets, then clearly you need to add on newer ships when the older ones drop off. So that is very, very important. And there's some consolidation opportunities within the segment. You always have the opportunity to build ships. So we are evaluating where our position and opportunity is in terms of, okay, we believe in the market going forward. We have a strong position and we'd like to maintain that. There's obviously growth on the supply, demand for shipping across the whole spectrum. So we need to be ready for that. So both new and existing assets are, on the continuous evaluation. So let's see what we can do.
Is there a particular size of vessel that's of interest?
Yeah, we grew up in the handysize segment, so that is core to us, and that is where we have the largest market share and opportunity, particularly for petrochemicals. The handysize vessels are the largest sort of usable vessels for deep sea petrochemical transportation between US and Europe and Asia. So that is clearly important to us. For future growth, we can talk about ammonia in a minute. Ammonia is a tremendous growth story in terms of blue and green ammonia, either for use for energy, zero carbon energy, or for agricultural growth that the world needs it. That generally requires larger ships. So that is something that could be an opportunity for Navigator. But if you're talking about very small vessels, it's not Navigator. Very large vessels, commodity shipping, one product, one trick pony, that is not us either. So it needs to be a little bit more specialized, a little bit more thought process involved, then that is Navigator.
Okay, well, we're talking about vessels, so new building comes into the equation. So that kind of brings us to next group of questions, just about your capital management and capital allocation. I know you paid down a little bit of, in the first quarter, you paid down a little bit of the debt, but just a longer term strategy. How are you thinking about the capital allocation? If there's suddenly a fleet of vessels to buy, what do you do, for example?
Yeah, that's a fair question there. So we continue to pay down debt. All right, our amortization for this year is about $100 million. Total debts, 950 or so. Net debts, high 780 million or so. We have about 170 million in cash on hand, plus another 20 plus million in undrawn liquidity. So that gives us $191 million of basically cash and liquidity. 50 million is our minimum. So that's where we're kind of reserving and keeping aside. So still a lot of liquidity to use and capital to use going forward. Sources of cash, obviously on the free cash flow, it's pretty meaningful as well. You're looking at 30 to 50 million per quarter, depending on obviously your assumptions for rates and utilization and other things, but in that range. And then CapEx is very little, right? Just maintenance CapEx. So we have a lot of cash to use and will use, right, for a few things going forward in terms of the ethylene export facility. There's going to be CapEx needed there. It's going to be spread out over those 6 to 10 quarters, kind of as I alluded to earlier in terms of the time frame for the expansion. But using some money for that, as Oeyvind alluded to, on the second hands and maybe some M&A activity, so some secondhand vessel acquisitions, using some capital for that. But beyond that, right, the plan is to return capital to shareholders in the coming years, in the nearer term, medium term, right? So in the next few months, we obviously want to focus on some of these very accretive projects and opportunities we have in the growth side, but also in terms of capital allocation, instituting a dividend policy and some of those things, return capital, that is going to be a priority as well. So in terms of our debt, we're very comfortable with it, right? When you look at the consensus estimates of around $250 million in EBITDA, as I mentioned, net debt this year is probably going to be around 750 or so for the full year average. So what's that, 3 times net debt to EBITDA? So pretty comfortable levels on the leverage. So that's kind of the capital allocation plan as we see it today.
Okay. We're starting to wrap up. I have a few more questions. ESG is always on people's minds when looking at companies. I wonder if you talk about some of the initiatives you have going on at Navigator.
Sorry. Yeah, I'll take that one. Clearly, ESG and green and all of these things is certainly something we are focused on. We just actually put out a materiality assessment. Going forward, we have a sustainability report. So all 3 of those letters are certainly important to Navigator on the environmental, the governance, the social. So on the ESG, climate change, emissions reductions, right? We have a decarbonization strategy going forward with that, optimizing some of the operations, identifying some alternative fuel sources and the like. We are certainly going to be reporting GHG emissions, so all of scope 1 and 2 and some scope 3 categories there. We're doing the voluntary disclosures via that CSR report. On the compliance issue, certainly primarily the EU ETS, right, the European kind of mandatory carbon offsetting scheme, looking at those things, sustainability procurement, focus there, certainly on addressing some of the core sustainability topics, the human rights and forced labor, occupational health and safety. Obviously, stakeholder engagement, right? I'm here for the investor relations and really getting a good finger on the pulse there with open dialogue there with materiality, sustainable issues, and that assessment going forward as well. And then obviously on the governance side, we're very highly rated in that across various kind of methodologies and various public data for governance scores. Same thing on the social side of things as well. So ESG remains a priority and something that we are going to participate in that green transition. We're moving those transitory commodities, right, as Oeyvind alluded to with ammonia. We're looking at hydrogen as well, and obviously on the ethane, ethylene, and other things, derivatives. So it's certainly something that is a core tenet of Navigator.
Well, it's very timely because as we're recording this, the IMO is having their MEPC 78 meeting in London, so or virtually. So extremely timely. All right, I do want to wrap it up. So if you guys can summarize for the listeners, really the investment thesis. What are the major highlights, and what should if you're telling the investors, talking to the investors, what should they take into consideration?
It's very straightforward, Barry. We have, in addition to shipping, our ship assets, we have infrastructure. So the infrastructure piece brings stable visible cash flows for a long term. And in combination with the shipping, which is a bit more cyclical, brings an upside as well. But the two in combination, obviously the terminal brings demand to our core fleet. So it's a double whammy on that, which is great. More infrastructure projects we are looking at, which makes a lot of sense. You have the expansion imminently, we're evaluating, as Randy was talking about. And the three commodities, or the three markets we do participate in, ammonia, LPG, and petrochemical, they all have a future. And they're all growing. Production is growing. Just to give you an example, for 5 years ago, 10% of our business stemmed from North America. Today, it's 40% and growing. And that's the reason why Randy is in Houston. So that's our future. Navigator's future is intrinsically linked to North America. So if you believe in North America, you believe in Navigator.
All right, no, that's good. That's right, Randy. You're Houston based, so that as I recall.
Absolutely.
So that's great. Okay, well, I want to thank both of you, Oeyvind and Randy. It's been a very interesting conversation, and it's exciting and full steam ahead. So it's Barry Parker for Capital Link Trending News Podcast Series. Want to thank everybody for listening, and thanks again, Oeyvind and Randy.
Thank you, Barry.